Hello, welcome to MarketBeat Monday, everyone. I hope you had a wonderful Thanksgiving week. And now it's back to reality and back to the market to see what's moving. As always, for MarketBeat Monday, we have our analysts Chris Markoch and Thomas Hughes with us. Thanks for joining us, guys. December not off to the strongest start in the market, not the news we wanted to see, but maybe not all that unexpected, right, Thomas?
Yeah, we had a weak opening today, but it was a small move lower, really tepid, I would say. Market moved in a tight range. So really, to me, that there's no change. This was just a cautious opening ahead of this week's data. There's quite a bit of catch-up data coming out. So to me, the uptrend is still intact. We're still poised to set new highs. It's just a matter of what the trigger will be to get the market to move up there. And it may just be as simple as the market creeping higher and hitting that new high. And once that happens, it could trigger more money coming into the market, and that fear of missing out trade comes into play.
Yeah, definitely some different moves. A lot of red to start the market or to start off December in the market. I think one of the moves that is really interesting to look at, I want to start by talking about Broadcom because it was down so much today. But that's after a really big rise that it had. You're looking at the chart here, it had jumped so much in the last week or two.
Yeah.
Really, the week of Thanksgiving, Broadcom had an amazing week. And now today we're down just about, 4% today?
Yeah, I think this is profit taking largely. I'm not seeing this as necessarily something that's indicating a problem with the overall trade. I mean, again, it hit that all time high. I think that's an all time high last week, or was it? Yeah, last at the end of last week, and I think it's just pulling back. It's just profit taking right now, and you know I
Right.
think there's still some of that going on in the whole AI trade in general right now. I'm not necessarily sure if there's, you know, people are taking profits towards the end of the year, and that's just what's happening. And
Right. I mean,
it,
Broadcom's up, wickedly in the last
oh
six,
yeah,
7 months, like more than 100%. So really, anytime the market moves higher, you're going to trigger somebody that wants to sell and take profits,
yep,
even if it's just for simple money management.
absolutely,
Anytime that somebody's position hits 100%, they should be selling some of their stake to get back some of their initial investment. But ultimately, this market looks pretty strong. Like you said, last week was a pretty strong week. Set a new high, broke this market out to a new high. Looks like a continuation signal. So I would expect to see Broadcom continue to trend higher over time.
A good look at one of the down stocks in the market today. So good to see everybody tuning in the chat. I love to see some of the regulars that we have. Welcome back to Market Beat Monday. We love having you here all the time. A lot of really good names coming in. Before we get into some of the names that you guys have for us to look at today, I just wanted to make sure that everybody watching now is subscribed to the channel. If you haven't subscribed to Market Beat yet, it makes a big difference for us. If you can hit the subscribe button and like every video that you watch, and even leave us a comment just to let us know you're watching, it helps us a ton. It helps us get some more momentum going for the channel and to get more people as a part of the Market Beat community. So subscribe if you haven't done that yet. All right, we're going to get to some of the names that you guys have. NVIDIA is one of them. I know I've got that chart ready to go. Let's talk about the big NVIDIA purchase today, just announced today.
Yes, synopsis. I think it's a good move. For one thing, it answers the question: what is Nvidia going to do with all of its money, all the cash that it's been making?
yeah,
This $2 billion investment is one good way for them to spend that money, investing in the future. So with synopsis, they're going to be working on expanding options and revenue streams across a broad array of sectors, really helping to cement Nvidia's future. So I think that this really is it's a good move for the company.
Yeah, I'm going to pull up Synopsys again, just kind of recapping that news today. NVIDIA announced a $2 billion investment in Synopsys. Do we know what Synopsys is exactly? NVIDIA's stock got hit a little bit from that announcement today, but Synopsys, of course, getting a nice little boost today because of that announcement, up almost 5%. What is Synopsys?
Yeah, it's like testing and engineering services for semiconductors and technology. So what this means for NVIDIA is just a way for it to to broaden and expand its exposure to different industries. So it should be able to use this partnership to help develop more specific types of technologies that will help it generate more specific revenue streams as the data center story starts to play itself out.
Mhm.
Yeah, one thing, Chris, I think you can talk about this. Sharman had a question about NVIDIA and when NVIDIA might actually start to see a boost in its dividend. I think that's a great question. It's something a lot of us have talked about, a lot of investors have talked about. There's not much there for dividend yield with NVIDIA, even though it's such a monster company.
Well, I guess the question that I would ask is I'm not, or I should say maybe not a question, but a statement I would make is I'm not sure if investors really want to see NVIDIA get too aggressive with increasing their dividend. I think I would prefer to see a company like NVIDIA doing something like what they're doing now with their cash, and that is making acquisitions like Synopsys, because that is really signaling the next stage of the company's growth. I think when you start saying you're going to have a company like NVIDIA simply increasing the size of its dividend, then that's sort of indicating the opposite of what I think investors would want at this stage. I
Right.
think now, can NVIDIA increase their dividend some? Maybe, but I wouldn't necessarily think NVIDIA investors should get crazy about them increasing their dividend.
Right. I totally hear what you're saying, Chris. With this big tech company, they definitely want to be spending their money to help secure
Yeah.
their growth. I think that the cash flow in this company has been so ridiculously good over the last few years. The cash balance is growing so quickly every quarter that they could easily increase their dividend to a more substantial level, um, and still
Sure.
continue to invest in their future and still have tons of money left over. I mean, right now they're paying 4 cents a share. That's really it's a token amount. Really, it's not really what you could consider to be a dividend. But what it does do is allow all these funds and other managers and portfolios that are only allowed to invest in dividend companies to buy Nvidia. So it helps improve the ownership. Um, but I think even more significant than a dividend, which I think would be coming, would be share buybacks. I mean, share
Yeah.
buybacks are something that they could do opportunistically, on a quarter-to-quarter basis or annually, and it would certainly help provide a lot of investor leverage over time.
Yeah, I mean, fair enough. I mean, like Apple has a dividend that they've been growing modestly over the course of a few years, and I could see Nvidia tracking along that level. But Apple doesn't have a dividend yield that you would sit there and say, "Woohoo!" I mean,
Oh, well,
like
right, totally.
Apple is a technology company that happens to pay a dividend. I think Nvidia is in that same category. So yes, I think they can afford to increase their dividend. I didn't mean to suggest otherwise, but
Oh, yeah,
I
yeah,
wouldn't
yeah.
but I wouldn't necessarily be suggesting that that's something that a lot of investors should be, getting that excited about. I'd be more excited about these deals with Synopsys.
Yeah, very good. Well, speaking of dividends, I want to move on before we get to a couple names. The first name we're going to cover, both TC and Little John want to know about SoFi. So we'll cover that one first. Thanks, guys, for always being here with us. But before that, we want to talk about kind of a dividend king, I believe anyway, Walt Disney, making a little bit of news this weekend simply because of a kids movie, a super popular kids
Right.
movie. Let's talk about what this record-breaking release weekend at the movies did for Walt Disney stock.
Well, right. Um, so record-breaking weekend. Really
Yeah.
fantastic news for the company. Set numerous records domestically and internationally, which, I mean, really fantastic news because in the last quarter's report, the entertainment segment was kind of weak. We were looking towards this coming year as an opportunity for the company to rebuild some of that weakness, and this, it's a home run. For me, it really affirms the outlook, and it says that the guidance for the year and also the analyst expectations for the year are probably too low. Now it's possible that subsequent releases won't be met as well, but the slate of upcoming releases I think is pretty strong. There's pretty good movies. There's pretty good content on Disney streaming. So I think this is really just a good sign for the entertainment segment and for the company in general for the upcoming year.
Now, the real question, Thomas, you've got little kids. I've got little kids. Did you go to the opening weekend for Zootopia?
We didn't because we were busy traveling, but I want to go check it out now more than ever.
I know. I think it's on my list too of movies to watch with the kids.
Right.
Well, if you're a Walmart stockholder, put it in the chat really quick. Are you happy to see a win for Walmart? It's been a little while, or not Walmart, sorry, Walt Disney. Let me know in the comments if you're a Walt Disney fan and you've seen something. Goodness. All right, let's move on to the next one. Let's talk about SoFi Technologies. What's going on with this company?
Right. So far.
Well, it's been growing really strongly. It's up 89% year to date, and one of the interesting things that is getting a lot of analysts excited about SoFi is the fact that it's done over 50% return in 2023. It did an over 50% stock price return in 2024, and now it's on pace to do that for a third consecutive year. So it continues to be one of the outsized, stocks in that sector, and the company's been hitting on all cylinders. It's one of those companies, Bridget, that I've said for a long time. It's kind of one of those stocks. It's the Abbott stock because it's one of those that it seems like every quarter they've overcome hurdles that people said they had to overcome in order for the stock to move higher. And for a long time, it didn't do that. And it seems like now in these last couple of years, investors have been rewarding the stock more, and it's starting. You're starting to see the stock move higher. In fact, it's moved sharply higher just in the last 12 months.
Right. Everything that Chris said is true. It's just a company that just is performing well. It's proving that its business model works, that the AI works. Expanding services, deepening penetration, really has a lot of tailwinds going for it right now. And I think that's all playing out in the analyst sentiment as well. Let me check on that.
That's where this actually has a little bit of a sticking point right now. I've got the consensus price target up, and we're trading above that consensus price target.
Yeah.
And there's a couple of recent downgrades. Any concern there?
All right.
I think you're seeing a lot of valuation concerns right now. I mean, it is trading at about 111 times forward earnings.
Right.
It could chop around at the level it's at right now. I see on the chart there's a little choppiness, or not choppiness, but there's a little bit of a channel forming. I don't know if Thomas would agree with me there, but it looks like there's kind of a channel.
Certainly. So with the analyst sentiment, there is one recent price target reduction, but they reduced to 28, which is right along with the price action is right now. The stock is kind of outpacing consensus, but you got to look at the trends. The trends include rapidly increasing coverage, firming sentiment with some recent upgrades, and the price target revisions have this, let's see, 10, like 150% increase over the last year. So what we're seeing right now is the market just kind of consolidating, waiting for that price trend to kind of catch up with where the market is. The way things are going, the analysts are leading to the high end of the range, and that puts this market up in the $38 range, because that most recent reduction was to 38. So that's still looking at a $14 upside from where we are right now, which is like a 50% stock price gain. So again, the trends are bullish. The market kind of got ahead of itself. We're in a period of consolidation, but based on these analyst trends, I would expect this trend to continue moving higher.
All right, that's a good look at SoFi. Let's move on to some others. We have a lot of different names coming in. Michael, I missed you last week, so let's get to Michael. He wants to know about DLO. Let's look at that stock. One of the comments on that is it's recently had an upgrade to $19 with a buy signal from Corsair Capital Management. So we'll look at that one. And then I also want to look at ASTS. It sounds like the stock is down quite a bit right now. It's a stock we've talked about plenty of times on the channel. So we'll talk about both of those and why ASTS might have seen such a big decline right now. All right. So I'm going to pull up DLO first.
Yeah, DLO is a payment processor.
Yeah.
Right. So certainly with e-commerce has a good industry and a good position. It seems like market sentiment is generally okay. I would say there's probably a lot of competition for this company. There's plenty of payment processors and fintechs out there trying to connect merchants and consumers. Growing pretty strong though. I mean, it's held a hyper growth pace for the last couple of years. 288 for the next one.
Yeah.
Still looking at a double-digit growth pace for the next quarter. It's profitable. I mean, all that, was good. The chart is kind of iffy. We're moving in a range. Right now, it looks like we're drifting up within that range. We might get another, surge higher. but it looks like there could be some pretty strong resistance in the $17.50, $18 range. Let's see, DLO, and the analysts are saying,
I mean, it has a focus in a lot of, it's not a U.S. focused company, and I think that's
Right.
probably helping it out a little bit in terms of why there's a lot of interest in it, because it's doing a lot of the cross border payment stuff in Mexico and Brazil and India, South Africa, and those. So I
Yeah.
think that's probably one of the reasons why the stock's doing so well this year, and quite frankly, probably why it's got why it's getting such positive analyst sentiment.
Right. The analysts, they're pretty optimistic, and institutional coverage is pretty high, 90%. But the price target ranges are kind of weak.
Yeah.
Tops out at the $19 range. So upside is limited. And it's kind of saying that we'll stay within this range. What we'll need to see is some catalyst to get the analysts to start lifting their targets outside the range to give the market any kind of a real hope for it to move outside the range without some other kind of a catalyst to push it.
Yeah.
Yeah.
And
That's
it's got like 90% institutional ownership too. So I think investors have to be careful with that, because that means it's not going to, I mean, it's good in one sense, but it also means that you're probably not going to get that real volatile juice that you might like. And there was a lot of heavy institutional selling in this last quarter. But I mean, I like the stock, or I like
Right.
what the stock's doing. And I especially like the markets it's working in, because that's an area where it might face a little
Right.
less competition.
Yeah. Short interest isn't real high, but it's
No.
elevated, so just, a lot of things that are kind of saying this market's going to stay in this range for a little while.
Right.
We'll need to see like some good news, invigorate analysts, invigorate institutional buying, give the shorts a reason to cover, to get this market out of its range. Otherwise, you're risking just dead money moving sideways.
That's a good look at a different stock we haven't talked about before. Thanks for that one, Michael. We're going to go to ASTS next, but I want to give Chris, why don't you look up another one? We've had a couple of requests for INKT. So, Chris, you can look up INKT. Thomas, let's talk about ASTS a little bit.
Right. The quick look at the chart. I mean, we're still in this consolidation, this pullback and correction that we talked about last week and the week before last. It looks like the market has good support down where it is. It may wallow at these levels. The last earnings report was kind of weak, but that's mostly because of the spottiness of the contracts and its ability to begin recognizing revenue as its network comes online. But given the miss, revenue still grew by 1,200%. The next quarter is also expected to be very strong, looking at almost a 200% sequential gain. So we are definitely in the period for this company where its revenue is going to start ramping and affirming this outlook. And it may take another quarter or two to really get the market impressed, but I think that's coming. We should see this market begin to rebound simply because how robust the outlook is. We're looking at hyper growth over the next couple of years, triple digits on an annualized basis. And then analysts.
Yeah, Thomas, that's one thing I wanted to talk about with this stock real quick is looking, even though we're down almost 35% in a month, we're still trading at
Right.
$52, which is above that analyst forecast. And that's after it's down 35%. So
Right.
part of my question is, why did it go up so quickly? Was it just excitement in the idea? Was it really getting ahead of itself? Even the highest analyst forecast is $60, and it looks like the
It is
stock
a
at
mark.
one point got above that.
Yeah, it is a market that got ahead of itself because it did have this rapidly swelling outlook, had lots of good news. So the market really was pricing in a lot of forward growth that hasn't really happened yet. So right now the price action has retreated back to where the consensus level is, more in line with the consensus, probably waiting for the upcoming earnings release or some news to affirm, this growth outlook that's better than this past earnings release. So there could be some weakness. There could be some sideways movement over the next couple of weeks, 2 to 3 months. But I would expect to see another positive catalyst emerge in the next earnings report or the one right after that.
I think the big question before we move on is it a buy at this range? So looking at, is it down far enough yet that it's a time to get in if you've not been in on ASTS before, or do you need to see more of a pullback before you're interested in buying this dip?
It does look oh, excuse me. It does look like a pretty decent entry point, but there is some risk that will move below the 150-week moving average. In that case, this market could fall down to the $38 level. So I would wait to see a clear indication of support at the current levels. And if you don't get one, then be patient and wait for that market to move lower down to that $38 level.
Yeah, and thank you for sharing whether it's a good time or not. That's one thing I'm always looking at. If you've been paying attention to the channel the last couple of weeks, I started Bridget's buys. So every time we do a video, I'm going to pick one of the stocks that we talk about and add it to our list. If you haven't looked at it yet, it's doing pretty well so far. Bridget's buys is up pretty well, but ASTS is definitely a name that I would look at in that because it's one that I like. I like the concept of it, but it is hard to know that it just got up so quickly. So I hope you haven't been burned too badly on that one. Here's a look at that page and how it's doing so far. I've only added 7 stocks to it so far, but up about 3.5% and in a down market today. That's not too bad, right, guys? The first one was on MarketBeat Monday a couple of weeks ago. We were talking about Nebius Group, and that one is up 16% from when we talked about it on November 17th. So this is a fun way to track some of the stocks that we talk about on the channel. Again, if you haven't looked at that page yet, you can scan the QR code. We'll put a link in the comments here in just a second. So you can click that too and check out Bridget's buys. All right, let's get on to INKT. This is a different one that we haven't talked about before. At least I don't remember talking about this one before.
I don't remember talking about this one either. So here we're getting into that biotech sector again. This is Mink Therapeutics, and again, the ticker symbol is INKT. So this is a company that is not profitable yet, generates no revenue. It's been making headlines this month. It had its earnings report on November 14th. It showed a slight, I guess you'd call it a little bit of a beat in terms of the fact that it lost less money than it was being forecast to lose. But again, there's no revenue coming in. So let me just go quickly through this. The company is, again, it's a clinical stage company, meaning it doesn't have any commercial products yet. It is developing off-the-shelf INKT, which stands for Invariant Natural Killer T Cell Therapies for cancer and other autoimmune diseases. So where the company's differentiating itself is from the CAR T or NK cell therapies, because in this sense, the iNKT cells come from healthy donors. They have their lead candidate is called Agent T797, and it received some positive phase 1/2 data in, I think it was just last week. So, but the stock didn't seem to get that much of a bump from that news. It seemed to like it sold off more sharply after the earnings than it did from from this news. Boy, the story here's all the same, Bridget, with stocks like these. There's a lot of enthusiasm behind it. I see the analysts really have a price target up there about 33% above where the current price is. It's all going to depend on can the candidate make through the clinical trial stages. It's not in phase 3 trials yet. It's probably not going to go in phase 3 trials until the earliest would be probably beginning to middle of next year. And then you're talking probably maybe even 2027 before it gets into the phase 3. So you've got a while to wait before this company is really going to be making revenue and, more importantly, profit. But
right,
as is the case with a lot of these biotechnology companies, if you're willing to wait on it and you believe in the technology behind it, I've only scratched the surface at the due diligence that investors would have to do. But, that's what you're dealing with here.
Yeah, I think this one is just really interesting to see how much of a spike we saw so quickly in the stock too. It was up around 65, I think, just about 6 months ago, now down
Yeah.
around $11. The analyst coverage is really interesting on this one. Thanks for bringing this name up. It's that volatile biotech. I think it fits the bill pretty well of a volatile.
Before we jump off of that, Bridget, I'm just scratching the surface on this because we're just giving this kind of a cold look. I would be curious if people are doing their due diligence on the stock. I'd be curious to see if and how they're using AI in terms of maybe developing their candidates and identifying ways of getting that candidate to commercialization. I don't know.
Yeah,
but that's one of the fascinating applications for AI. So maybe.
Yeah, there's a couple other ones we want to go to here quick. We're going to talk about Joby and Archer. We had a couple people ask about Archer, so of course we'll talk about those together. But first, before we get there, I want to talk about just in general. Before we started, we were talking about healthcare being down quite a bit right now. What do we see? What are we seeing in healthcare, and why would we be seeing a decline there?
I didn't see any specific healthcare news today.
My short answer would be it's the whole thing of the expiring things, the whole reason behind the government shutdown, and they still have to come up with a solution, and they haven't done that yet. That'd be my 50,000 foot view level, because I can't understand why the entire sector is red, and that's what the heat map showing is the entire sector is red. My guess would be it's because that they haven't kind of come to a resolution on that.
Interesting.
So we don't know how that's going to impact drug prices. We don't know how it's going to affect this and that, and
All right, very good look. And then Sharman had a question about the Fed rate cut and what we're watching as far as when that announcement could come, and what the current kind of trend is on whether we think that's happening or not, and how much it could be. I know there's always been talks of rumors of one more coming in December, I believe.
Right. So over the last month, the market started to feel like there wasn't going to be a cut. Some Fed hints and some data pointed to no cuts. But then some of the catch-up data that we've gotten from during the shutdown has kind of affirmed that the economy is still okay. Labor markets might still be kind of weak. And that kind of cleared the way for the Fed to actually do that cut in December. So those odds have kind of lifted back up to where they had been before. The longer term outlook is still a little bit affected. We're not expecting quite as many cuts by June next year, but that could change also. We're looking for more data to come out over the next few weeks, not only catch-up data, but more current data. So in this light, it's possible that we could see, economic health still being present and inflation being tame, and providing the Fed, just some leeway where it could continue on with those rate cuts. But that news is going to change a lot over the next few weeks, and I think it'll be market moving, and it will certainly play into some market volatility.
Now, specifically, the Fed meeting's next week. If he's asking for that specific data, so the announcement of whether or not there's going to be a cut or stay the same is going to be on December 10th. So it'll be a week from this Wednesday. I just looked at the CME FedWatch tool, so they're still predicting right now an 87% chance of a 25 basis point cut. I think, Thomas, if I'm not mistaken, I think there's some economic data coming out this week on that. Aren't they going to do like the revised CPI? Isn't that coming out later this week?
What we're going to get on Friday is the September read on PCE.
Okay.
So it's an important inflation read, but it's incredibly rear looking. It's way back from September.
Yeah.
So what it'll do is it'll tell us if things were getting worse or better way back then. So that will have some impact on the outlook. It will certainly affect the rate cut outlook. But I think it might not be enough data to really sway the Fed either way, just because of how rear looking it is.
Yeah.
Good. Perfect. All right. Well, we're going to go over Joby and Archer right now. We had another request for DVLT, and then Roaring Space Queen wants to know about ONDS. It's one that we talked about in your picks of the month, I believe, this time, Thomas. So we'll look at the chart for that one too and talk about that a little bit more. And AMPX is another question because there's still some downward moves on that one. So we'll talk about all of these. Let's start with Joby and Archer though. Archer is really getting down there quite low. I'm going to pull up that full screen on the chart.
Yeah.
We're down all the way to 746.
So it's to me, Joby and Archer are moving in tandem, but these two charts, these two markets show a clear division, bifurcation, to where the market doesn't have as much faith and hope in Archer, and you can see that because the price action is so low. It's more trending in the low end of a trading range. It's definitely below critical resistance points. Where Joby is trading in the high end of its range, it's showing support at those same comparable critical points. But the real big question is their commercial viability. Now, what I'm seeing is, analysts still think that Joby is going to reach commercial certification sometime next year, which is awesome because it'll start commercially operating its EV tolls by the end of the year, which is what its core business is going to be. Between now and then, it's using its new Blade segment to offer helicopter rides from key airports, which means it's going to have revenue starting very, very soon. Now, for Archer, what I'm seeing is some analysts are thinking that it might not get certification until 2028. That's fully 2 years after Joby, which is really bad news for them. Joby's going to have 2 full years to cement its position and build out its network and to generate revenue. And that's what we're really seeing in the stock price. Now, kind of tangentially, Joby has made allegations that Archer committed some corporate espionage, which the details seem pretty cut and dry. But I'm not the lawyer or the judge to decide on that. That could certainly have an impact on the company long term, and right now, I think it is having an impact on the sentiment.
That's a good look at those. We talk about them often, so it's just a good update. Really quick with where they're at right now. Are they buys for those who believe that this idea is going to take off? Is it still too speculative that you could see a lot more moves, a lot more volatility in the future? Or do you think it's a good buy at this point, especially for Archer to get in at this low?
Well, so I think both of the stocks for traders looking for swings have both moved down within their ranges and their channels and set up are in position to produce a bullish swing. As far as which one is a better buy or which a good buy now, I think that would be Joby far more than Archer, just because it's got a cleaner path to profitability and to commercial operations. Certainly has hurdles to surpass, but in this comparison, I think Joby is the better choice.
All right, very good. Let's move on to a couple others. Again, we're going to go to DVLT next. I think this is one we've talked about before. I can't remember, Thomas, if you talked about this one or not.
Yeah, we have quite a few times. This market still looks like it's moving sideways, kind of sidewinding, trying to get traction. I think we probably still have a high short interest. Let me check on that.
Yes, about 11.5% of the float.
Yeah.
Oh yeah, and that's up. So short interest is rising. That's certainly going to keep the market under pressure. We still have very tepid institutional activity. It seems like they're accumulating, but they own less than 1% of the stock. That's not very much. Also, analysts aren't very active with the stock either. I mean, we have 3 covering it. They're looking for 270% upside, but only 3 analysts isn't very many. One of them rates as a sell, and that's the most recent coverage. So certainly is a promising stock. It has had some affirmations recently with its deals and its funding, but still needs to start producing. Until then, I think this market's going to be moving sideways with a risk of correcting back down to lower levels because profitability, revenue growth isn't really there yet, and there's plenty of short interest and not enough broad market support.
All right, good look at that one. Let's go to ONDS next, and then AMPX. Chris, you can chime in too. I know I've talked about both of these in Thomas's monthly stock picks, but ONDS we've talked about on MarketBeat Monday a couple weeks ago. This is a drone company.
Right.
Thomas, why did it make your monthly stock pick list for December?
Well, its drones have real utility. Not only are they capable, but they provide cost effectiveness. They're getting lots of follow-on orders from different government agencies. The revenue outlook is starting to swell. Analyst coverage is improving, and also institutional coverage is starting to improve. And it's kind of got it set up to rally over time. And within this equation, there's also a very high short interest. So we're looking for potential for a short squeeze where this stock could probably double in price real easy, provided we get the right catalyst that could come out really at any time with the announcement of new contracts or with the upcoming earnings release.
And Chris,
Yeah,
your thought?
I see the government contracts as being the key driver here. I mean, that's what you're going to be looking at for a lot of these technologies, is the fact that the company has these contracts with government, not just with the U.S. government, but with governments, with international governments. That's going to be the driver, because if they can get those contracts as a way of, proving the technology, then it makes it easier for them to branch out. Stock does have pretty high short interest. It's
Right.
but, yeah. That's up a
One
lot
thing,
in the last month, but
yeah. So one thing I'm looking at is the growth. It's still a pretty small company.
yeah,
The last quarter it made about 10 million, but it's in a hyper growth phase where it's
it
growing
is.
at a 500% pace.
Wow, that is.
And the upcoming quarters are expected to be very similar. And the way that the deal volume is going, it's going to sustain a hyper growth pace for quite some time, I think.
Yeah, this looks like a good one.
Okay. All right, moving on to AMPX. And then if you want to look at Chris really quick, look at Clorox. You want to change it up. Somebody asked to talk about less of these small cap stocks and more of a company that's been around for a while. And wondering if Clorox is a good value play right now with the levels it's at right now. So, Chris, you can look that one up. Thomas, let's talk about AMPX and what's happening with that stock.
Well, I'm checking it out right now. I don't think there's any new news. No. So this market is still just kind of consolidating and waiting for the next big catalyst to come out. The news stream has been very good. The latest release aligns with the outlook, swelling business, improving outlook, and new clients, new business, hyper growth. So we're just waiting for this market to decide to move higher. Right now it's down, let's see, 15. So it's down about 30% from its high, but it's still trading at critical support. And that critical support was the top of the previous range. And so what I'm seeing right now is this market has moved up from its old lower level to a new higher level, where the market really now is about $10.60, $10.50. Probably stay around that level until the next release comes out, which will probably provide that catalyst, help it to get moving higher again.
Very good. Yeah, that's what I feel like we talk about every week. So a quick little run through on AMPX works well.
Yeah. Right. So until there's like some new news, it's just going to be the same story with this one. It's a great stock. It's a great story. The market is moving higher in leaps and bounds, but each one of those leaps and bounds is going to be followed by a consolidation and a correction, which is where we are right now, which just allows the market to kind of cool off, regain its feet, get itself ready for that next move. And it'll come. It's just a matter of time because of the way the story is developing, ramping production, ramping sales, ramping clientele, ramping outlook, all just points to a higher stock price.
Okay. All right, Chris, let's take a quick look at Clorox. This is a little bit of a different story than what we've been looking at already this show. This is a rough chart for a company many of us have known for years.
Yeah, the company's they're in the process of a operational transition. They're trying to, and it's not going very well. The company itself issued some pretty tepid guidance in its last quarter. It actually did very well in its last quarter. They had a beat on the top and bottom lines. They were a little bit lower on a year-over-year basis, and I think investors were hoping to hear a little bit more positive guidance. They didn't hear that. That being said, the stock is trading at around 16 times forward earnings, which is a discount to its historical average. So that's good. It pays a dividend that's a little bit. The payout ratio is getting a little high, but I wouldn't worry about a company like Clorox not being able to pay the dividend. If you believe the analyst forecast and you believe that the consensus price target's $125, which is about an 18% upside, and then you factor that in with the 4.6% dividend, then Clorox looks like it could be a value play here. Analysts some analysts have been lowering their price targets recently. So it certainly has that feel of a stock that's been beaten down so much that it might actually turn into something good. But
Right.
you're gonna wanna pay attention to to what some of these analysts are saying about it and decide where do you stand on it. This should be one of their best quarters. Just historically, this is a strong quarter for them in terms of their revenue, and because we're in the cold and flu season, and that's when people are going to be using Clorox products. So they're going to get a little bit of a bump from there. Um, you know,
I think one thing I want to just mention quick, cold and flu season makes sense, but remember that whole year when the whole year was cold and flu season, I'm talking about
right.
coronavirus year. You look back at the history of this stock. I
Oh, if
think
you
if
oh,
investors were
absolutely.
getting into this during that season, that
Right.
whole year, they
I
could
mean, the
be
stock chart
holding
was
this at a
nuts.
loss.
I'm sorry, what?
Holding during the 2020, during the
Right.
Right.
pandemic, the stock jumped so much when you look at the
Oh, yeah.
all-time history of it.
Oh, yeah. I mean, that.
Right. Because it was the stock to have back then, because everybody was using Clorox every day, multiple
Right.
times throughout the day.
Absolutely.
They were announcing partnerships with major airlines to keep them sanitary and things like that. So it certainly had a big boost from COVID. But it really is the poster child for the post-COVID letdown, because once people started getting tired of COVID, you can see that the stock price just started to deteriorate. And
Right.
that's because it just wasn't, sustaining those really awesome growth pace that it,
Right.
produced for 2 or 3 quarters, while people were, pantry loading and really leaning real hard into sanitation.
Yeah, I mean, you're seeing the stock though trading now 10-year lows. I mean, it seems like
Right.
the sell-off is a little overdone right now, and that I would then support that as saying that's probably a good reason to think of it as a value stock, because it's been so beaten down. But
Right.
Yeah. I like Charmin. Good comment here about Clorox. Just no new innovation. It's really the same thing.
Well,
Same product,
what
right,
nothing new.
what are they going to innovate?
right,
The best thing that
True.
they could do is use some of their money to buy another brand that they could grow, because
yeah,
Clorox is more than just Clorox. They own quite a few center of the store brands, um, that are popular and help maintain the business. So they might just need to find another one to add to the portfolio that they can use as a growth pillar.
yeah.
All right, let's move on to another stock. Thomas, were you looking at one?
I don't think I was.
Okay, see, I have to remember where we're at and what I'm on. Let's pick a couple others to look at here really quick. We'll go to the latest one, DG, Dollar General. I know that's one you like to talk about. We've talked about before. And then we've had a couple of requests for GRAL, Chris. I think this is one you've talked about before, GRAL. Somebody asked about Wisher asked about quantum and energy stocks. We're going to be talking about that on the channel next week sometime. So stay tuned for that one. We'll talk about that later. But for now, let's stick with DG and then GRAL. I'm going to pull up DG first.
Yeah.
Right. So Dollar General, the news flow looks good. The last earnings report was good. Sentiment seems okay. But I'm looking at the chart, and the chart is ugly. Now, it looks like it could possibly be a head and shoulders reversal, but I think based on the bias in the action, this is going to be a reversal from down to sideways, because this is totally skewed lower, in my opinion. We have a high left shoulder. We have a very deep dip for the head. And then the right shoulder is lower than the left shoulder, which just shows the market kind of weakening down as it moves through the bottoming process, instead of like building up more support. So this one is one that I would be worried about. So I'm sure if we dig into it, we might find a reason, but at face value, it's not really jumping out. I mean, valuation seems pretty good. I mean, today it's trading about 18 times earnings, and that falls to 7 times earnings in 2035. So that suggests we could get a pretty robust stock price increase. Let's see here. The dividend still looks pretty safe. Payout ratio is low. So that may simply be because it's not really growing that quickly, And as far as the dividend goes, it's not paying out that much of its earnings. So some other retailers pay a higher percentage of earnings, which would, command a premium among dividend collecting investors. So yeah, this one could rebound, but the price action is not giving me a lot of hope.
Yeah, it's an interesting time to talk about retail stocks, especially over this holiday season. We saw some other small retail stocks see some moves just based on the weekend data from Black Friday shopping and all of the shopping. But I think that the real moves from that value customer could potentially impact Dollar General. I think that we talked last week about consumer trends, consumer confidence being down quite a bit. Any potential impact on retail stocks, especially these value brands like Dollar General in this kind of consumer sentiment market?
Yeah, that's really hard to say because retail spending has really been focused in certain areas, and you can see that in Target's results, and in Walmart's results, and in TJ Maxx's results, where investors or not investors, but consumers are price conscious, but they're also quality conscious. And I wouldn't say that Dollar General really has the highest quality goods, especially when you can go to these off-price retailers and find really, really smoking deals.
Yeah, good point. All right, Chris, let's move on to GRAL. And then, Thomas, if you want to look up just a couple of more, we've had a lot of requests for VFF, so you can look up that, see if it's something worth talking about, VFF. And then we'll talk about UAMY. That's another one that has been asked a couple of different times. All right. Grail, I've got the chart pulled up right now. It looks like it had a little bit of a pullback after a really strong month, Chris.
Yeah, it did. This is one I'm not familiar with, but I did see that you had an interview with somebody on the channel about this. This is an interesting biotech company. So the company is the company's main product, I guess you'd call it, is they've developed the Gallery test, and it's a blood test that can detect more than 50 types of cancer. So it's an interesting company in the fact that it does have revenue coming through the door. In fact, in the last quarter, it was up to about 36 million in revenue, but the company's not profitable yet. And I think one of the reasons why you may be seeing the pullback that you've seen is the fact that the company had although it did better than expected in terms of the operating loss, it was still higher, I think, on a year-over-year basis. Nevertheless, analysts, the consensus price target $75. That's about 23% below where it's at now. But I see that you've got several analysts who have price targets, or at least a couple of them that have price targets at $100 or even $105. I think you could say that this is a pullback that's just based on profit taking at this point. I'll be curious to see if the stock would go down and get down around that $92 level, or even down around, if it were even to get down to the $80 level. I think that would be a screaming buy opportunity. But that's not to say that investors couldn't get in on it now. I'm looking at the short interest. Short interest is up about 13%. It hasn't really moved that high in the last month, but it is something to think about.
I think one thing that stood out to me here, just looking through the charts a little bit, it looks like institutions started buying this stock back in Q4 of last year, or about a year ago. And you look at the chart, that would have been a good time to be getting in on this stock because it's gone up so much. And it maybe is one of those ideas. I remember the guest who was on talking about this, saying the idea has a lot of potential if this cancer screening blood test ends up getting that FDA approval and it's covered by insurances. It could be a common test that could really see some movement on the stock then. But we're not there yet.
We're not there yet. But that doesn't stop investors from getting ahead of it. And I understand that there's the temptation of you don't want to be not in the stock when it gets that FDA approval and it can be used and it has insurance reimbursement and such. But right now, do I want to get in on it? Probably I want to wait for a little bit, maybe see the stock pull back a little bit more before I get involved with it.
All right, very good.
Yeah.
Well, Thomas, which one were you looking at?
Village Farms.
All right, VFF.
Yeah, right.
What is this stock? It looks like a small one.
It's a tiny company.
Yeah.
This company has got a couple of tailwinds going for it. One of them is potential for U.S. Legalization of cannabis. One of it is the company's shift from a combo play on organic vegetables and cannabis to being a cannabis pure play.
Okay.
It's got higher margins with cannabis. It's produced record profitability, allowed it to initiate some buybacks. But again, the weed business is real small. There is some growth expected, but it's not robust. I think as far as weed stocks goes, this is another one to be careful chasing, because if we do get federal legalization, these small companies are going to disappear because the big players are going to just immediately step in and dominate the market. And until then, you've got profits and buybacks to help support the market, help support the stock price. Analysts have been fairly positive about it, so I mean it looks okay. But as far as investability, I think that this is another one that just to be careful with.
Yes, very small company for sure. All right, we only have time for maybe one or two more. I know I had said UAMY as one, and I think this is one we've talked about on the channel before, but I can't remember what it is. A mining company?
United States Antimony. Yeah, it's going to be in that rare earth category.
We just had a video out for those who are watching with Jeffrey talking about some rare earth stocks. If you haven't seen that one yet, just go back and watch it. It just came out on Sunday. It's a really good watch about some of those stocks that are down so much right now. This is no different. This stock is down 30% in the last month. Still down yet today. Another 10% today, it looks like. Any thoughts on this one?
I'm pulling it up. Oh wow, yeah, right. That looks like part of the, just the rare earth surge and pullback.
Yeah, it looks like the mining operations are. They've started mining operations in Montana, but it looks like they're going to have to. They're pretty close to having to shut it down for the winter.
Yeah, they're making like 9 or 10 million per quarter. I mean, the growth for next year is like 200%, but we're still looking at only 120 million. Could be profitable though. That's good. This one could be a buy for next year, but yeah, like Chris said, with the winter coming on, it would maybe be wise to wait until the spring, because this market could continue to move lower. Looks like today's action has it down 10% today. That's pretty big. We're at long-term lows. We move below critical moving averages, so this one could continue to sell off.
Yeah, I think that's definitely possible. Excuse me, everyone. My computer is frozen right now, so nothing is really changing on the screen yet. I'm hoping you're still able to hear this, but we are just about done for the day, so I think that we will be wrapping up here. Chris and Thomas, if you can still hear me, I think you could just give a little closing thought. Anything, any final thoughts for the market heading into this week?
I think this week could be more of what we saw today, which is just kind of flat, tepid action while the market waits on this data, reacts to what it is, and kind of gets a grip on what it thinks will happen next week when the FOMC meets.
Perfect. All right, guys. Thank you so much for watching. Thanks, everyone, for watching. Sorry about this last-minute delay at the end. As always, happy investing, everyone.